welcome to Ticker TV Diwali special Samvat 2076. As we say goodbye to Samvat 2075, we are here to discuss the ideas for the new year Samvat 2076. And today we have Vineeta Sharma, the head of equity research from Narnolia Financial Advisors. Hello ma'am, happy Diwali.
I, Vineeta Sharma, on behalf of the entire Narnolia family, wishes Ticker TV viewers a very, very happy Diwali and a very, very prosperous investment year ahead.
So ma'am, which sector should our viewers look for Samvat 2076 this year?
So, going forward, I think we are liking financials and the consumption story. The credit cycle right now is into a little bit of pain, but going forward, I think it should revive. If we go sector wise, like energy, if we see, it is more of, event driven right now. If you look at metals, they are more concerned with the global issues and it will have its own tantrums. IT, we are not seeing too high a growth going forward, so we sort of are neutral on IT. Infrastructure is one space which can do better, but maybe we'll look into it post this next budget, because in that case we'll come to know as in what fiscal room the government has, and accordingly how the infrastructure spending will be routed. Going forward, we think if we consider the banks, in the last 5 years, there has been around 65 lakh crore bank assets were there, and out of that advances, already some 18.5 lakh crore of NPA has been recognized. Now going forward, we are now sitting on the advances base of 100 lakh crore for the banks, and the slippage is around going forward is 2.5 lakh crore, some more if we add in excess of 3 lakh crore. So in that percentage terms, it appears a little smaller than what we have already absorbed in the past. As and when the credit cycle improves, we are pretty sure the corporate lenders, which has not been a performer earlier, and they should do better going forward. And once the credit cycle, the financials improve, it should have an impact on the discretionary spending. Maybe, any kind of discretionary, maybe you can see media, the entertainment sector, some part of auto sector, some retail, all these, or some staples on the discretionary side.
Ma'am, what can we expect Nifty and economy overall next year?
See, Nifty right now, in fact, the whole market right now is a sort of a tussle between, the short-term pain that we are witnessing across globe, across, the entire Indian economy. And it's a tussle between the pains of the global and macro issues. But in the medium term, the government has taken a lot of, a slew of measures to improve the working capital, to empower the banks, or to smoothen the processes that were hindrances in say for instance the corporate tax benefits that the government has announced. So all in all, in the medium term, we are very, very positive, and we expect that it should have good impact going forward. The corporate, profits to GDP are already at a very, very, I think it's one of the lowest right now. And going forward, once the management, they get empowered to strategize and they see predictability, of regulations going forward, the corporate profit should, revive from here on. Once the banks, they give more loans and the credit cycle improves. Only after Q3, we are pretty confident that the Nifty earnings, which has been for the past 3-4 years, it has not seen much of a growth, sub 10%. I think post Q3, we are pretty confident that Nifty earning estimate should be revised upwards. Right now, in the medium term, we have a Nifty target of 12,300, and we are already trading at a 19 to 20 times forward EPS. So earning growth, so valuation does not provide much room, but definitely once the earning growth comes in, we might have to revise our target on the higher side.
Ma'am, your favorite 3 stocks for Diwali?
So as I said that we are bullish on credit cycle and the consumption theme. So first stock that we like is Avenue Supermarts, and DMart, considering the organized retail space in India is only 5%. The penetration is very low as compared to US, which is right now 85%, or to any other country, say Brazil, it is 45%. So we expect that the penetration has to increase many folds going forward. DMart has a very clean balance sheet. They are they have a very clean strategy. They are not going aggressive, and the best supply chain management, I would say, best balance sheet, and the way they are pricing the products as well as maintaining the quality of the product. I think DMart has got a niche in the retail segment. The way they are, the inventory turnover, if you look at it, they have really managed it very well. In the past, say 8-9 years of DMart has doubled its revenue and more than doubled its net profit every 2 years. And the penetration that we are thinking should increase. We expect some 25% top line revenue growth still going forward for 3-4 more years, or many more years. In that sense, if we look at the valuations, DMart is still trading as 2.75 times EV upon sales for FY22, and we expect that this should be a consistent compounder for the investors going ahead. The second company that we are liking is HDFC AMC. The AMC business, is again a consistent compounder, because if we understand right now, particularly in India, the FD is around 100 and some 18-20 lakh crore, and the AMC total AUM that the mutual fund manages is around 25 lakh crore. So if we understand, that is around 10 to 15% of the savings is only going towards the mutual fund, and comparing to a global country and other developed nations, this should be at least minimum to 50% of FDs, 50% into mutual funds. So we see that there is ample room for growth for a mutual fund company. When we look at HDFC, we cannot doubt the way it has strategized its business, the way the parentage, the kind of distribution network it has, as well as the cost efficiencies that the HDFC AMC brings into its profit and loss account. The PL is has a huge room for operating leverage. So I think the macros are intact. I think HDFC AMC valuation right now 17.5% of the total AUM. That might appear a little stretched in the near term, but it will keep giving you opportunities. I think HDFC AMC is not for this Diwali, but maybe for next 10 Diwalis, you should accumulate HDFC AMC going forward. So our third stock that we are liking is United Spirits. The per capita income is rising, and United Spirits already has a 38% market share, and it distributes, we all know it distributes Diageo's products in India, and now it's a subsidiary of Diageo. It bottles some of the products here, and its own brand itself is, I think Diageo is the second largest spirit maker all over the world in terms of volume. keeping that in mind, one more thing that what we like about United Spirit is the kind of premiumization the company can have going forward. If we compare the net margin of Diageo and United Spirit, the Diageo has 20 to 25% net margin, while United Spirit is only on a 8 to 9% margin. And once the per capita income rises, the affluence side of the category increases, I think the demand for premium products will keep on going ahead. So right now, if the spirit industry volumes are growing only at a 1%, United Spirits volumes are growing at 8 to 9% growth. And once the volume growth is there on the premium side, it will help the net profit margin. United Spirit has in the past, it has gone through turbulences. In fact, the entire sector through highway bans and many regulatory changes, the route to market changes. But I think the kind of the fiscal room that a state has for a liquor business, we don't see much of turbulence going forward on that side for United Spirit as such, or the sector as such, barring Telangana, where we might see some disruption. So margins are set to, margins will improve going forward because of the product mix, and the volumes are still expected to grow. I think United Spirit will be a good compounder going forward.
Thank you so much, ma'am, for being with us. A happy Diwali to all the Ticker TV viewers. For more stock updates, keep watching Ticker TV.